Trade limitless on HMX, the next-gen decentralized perpetual exchange. Trade crypto, FX, commodities with up to 1000x leverage on the Arbitrum network. Benefit from low fees, multi-asset collateral support, and cross-margin flexibility. Check them out.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together, there is no stopping us.
Good afternoon, everyone, and welcome to Free Trading Congress. Very, very excited to be here with you. And we've got a really, really special guest for you today in Julio Moreno from Cryptoquant. Now, for those of you that know me, know that I'm quite a simple creature when it comes to trading in terms of price action, but I have to admit to always having a really, really deep vested interest in on-chain analysis. So it's a real pleasure for me to welcome Julio to the show today. And I am going to be absolutely absorbing as much of this as you guys are as well. So I've got my pen ready. I've got my pad on the side. So without taking up any more of your time, I'm going to introduce you to our esteemed guest. Please welcome Julio Moreno. Julio, fantastic to have you on the show, my friend.
Thank you. Thank you. Thank you for having me.
No, you're very, very welcome. We've got a lot of excited guests. And like I say, not just the guests, but a lot of the team as well that are really, really looking forward to this kind of deep dive into on-chain analysis. So I know you've prepared a load of stuff for us, mate. Can we maybe give the audience just a couple of minutes rundown on yourself and your background?
Yeah, sure. So I've been working in Cryptoquant for 1 year and a half now. I'm the head of research at Cryptoquant. And most of my career, my background was in commodity research. So about 13 years of commodity research, especially in the aluminum industry.
Wow.
Researching about prices, production costs, demand, supply. So, and then I transitioned it to the crypto industry to analyze it also. And I have studied economics in Monterrey, Mexico.
Fantastic, absolutely fantastic. So was it that's a really interesting transition. So I came from kind of a bit of a traditional market background myself into cryptocurrency. And I think it was such an exciting space when it started, and it still is, right? But this whole thing, it kind of emerged from nowhere. Everybody was saying it wasn't going to get traction. And then this thing just really started to kind of gain a lot of momentum, didn't it? Was that what attracted you across? Because I know the commodity space relatively well. I know how fiercely competitive that is on the data research side of things. Huge amounts go into the research and development there. Were you just kind of looking more for the excitement of more of an emerging market rather than one that was so established?
Yeah, I mean, I started to pay attention to Bitcoin around 2018. And so I thought like it was a really, disruptive technology and also a monetary asset. And but I initially what I saw is that the people that worked on the industry were like more of developers, right? Software engineers, and I don't have a background on that, so I tried to become one, but I couldn't. I mean, it just wasn't in me.
Yeah, same here.
And then I become aware of this other world about, there's also a lot of data that is generated in crypto. And so I thought like, okay, maybe this is more of my background, right? Data analysis aspect of it, and specifically the on-chain aspect of it. So I started to do some research, started to post it on Twitter about, just my research, just for my, just because I enjoy doing it. And so that's how I started to analyze Bitcoin and other cryptocurrencies. And that's how I got into Cryptoquant. The founder of Cryptoquant, he saw my analysis on Twitter, and that's how he invited me to collaborate with Cryptoquant.
Really, that's incredible. So it's really funny you saying about that, because actually I came from my background very similar to when I started working with the Birb Nest. you know, and Adrian, a few of the team members and bits and pieces had kind of seen me online, and actually a little bit through, you know, I'd been trading for a while, but I didn't really have much of a Twitter presence. It wasn't anything that really interested me that much at the time. As you know, very difficult to build those kind of social media presences, and you've got to really be dedicated to it. And I was quite happy, you know, in my little space, my little bubble, trading away. But the reason that I bring that up is just what a powerful medium social media can be for finding very good people, right? Because,
Yes, exactly.
I mean, we won't go down this rabbit hole now, or I'll keep you here all day. But I mean, when you look at the amount of talent that are on these platforms now, the utilization of that to hire and find good people and good collaborations is incredibly key. The flip side of it is that there's such an incredible amount of noise in the space as well, you know, that to find the very good people. But, you know, I had the pleasure of crossing over with Key previously, and I know obviously him and Burb go back quite a long way. So he's a gentleman that knows exactly what he wants and has a very, very good eye for catching it. So no wonder he showed a lot of faith in you. So before I swing us wildly off topic, I really want to kind of give you as much of the floor as possible, because like I said, I'm as interested in taking notes as everybody else is as well. And just as a reminder, guys, you can follow Julio on Twitter. His details are there. And also after the stream and in the description as well, we'll get you all of the information for Cryptoquant, how you can sign up to the website. They have free access availabilities as well as paid services, and just a really, really good thing to go and check out. So without further ado, I know you've prepared an awesome slide deck for us. Let me pop this up and let me hand this over to you to run through for us.
Yeah, thanks. Yeah, so the idea is to show a little bit how on-chain data can be used for trading decisions and also for risk management, which in this industry seems to be, you know, more important, right? You know, not lose your money. That's more important. So yeah, we'll go over some of this type of metrics that we use, that we have developed, and that can show you how to interpret them, how to use them for trading or investment decisions. I mean, this is not financial advice, I must say, but so do your own research. But this is just some good examples on how to read this type of metrics. And just to give you, I mean, you already gave a background for Cryptoquant. So we are a data analytics and research provider of especially on-chain data. So all the data that is created on-chain on different blockchains. And so this is some of our reach. We have a lot of users, retail users, institutions, and also we have some important media presence. So yeah, let's talk about the fundamentals of on-chain data. First of all, if people is not very familiar with on-chain data, so I guess most people are really familiar with market data, that we call it market data, which is, you know, the price of the assets, the trading volume, the order books, the technical metrics, derivative data, open interest, funding rates, liquidation. So all this we call it market data. And this type of data is generated or extracted from exchanges, from trading venues, right? And so you can have access to this type of data directly from exchanges, and this can be used perfectly for, you know, your trading decisions or your investment decisions. So I guess, you know, when I started also analyzing Bitcoin, of course I started first with just the market data. I didn't know anything about the on-chain aspect of the data, and so analyzing prices, analyzing technical metrics, you know, moving average, volumes, all of kind of stuff, right? But then there's, for these type of assets, you know, cryptocurrencies are really particular on this front, that there's a lot of other type of data that is generated basically 24/7, right? And this is the type of data that is extracted directly from these blockchains. And there's different types, and we call it, one of the types is the network data, which is data from, you know, that you get from the transactions that are happening on the network. You know, how many addresses are being active on the network. the transfer volumes that are being sent, the fees that people are paying to do these transactions, and then there's also the flows, what we call it, the flows and the behavior of market participants, of some important market participants, right?
Mm-hmm.
And so we also track like, what are miners doing, right,
Mm-hmm.
with their coins, for example, for Bitcoin, or what are some other important players in the industry doing, like exchanges. Is the
Mm-hmm.
capital flowing into exchanges or out of exchanges? Are these whales moving their coins, right? Like important market participants that have a lot of coins, what are they
Mm-hmm.
doing, right, with their coins? And that's what these type of entities are doing is really important to know what's happening in the market or what could happen, right?
Mm-hmm.
And then there's also other family of metrics that are called valuation metrics, and this basically what informs us is about the market cycle, and about how, let's say, how cheap or expensive a cryptocurrency is.
Mm-hmm.
And so that also will inform us about some interesting decisions that we could take, right?
I
The,
remember
the,
hearing about the Newpool chart. Sorry, Julio. I remember this
yeah,
being a really, really big thing, right? I mean, so to see that in there is really interesting. Like I say, the MVRV chart I remember as well, not the SOPR. But just to give us a little bit more kind of insight, like the Newpool one, for example, like based on the valuation metrics, what's that kind of telling you? What can you kind of extract with that information?
yeah. So that one is the unrealized profit or loss.
Mm-hmm.
So that is basically tracking the profit margin of holders,
Mm-hmm.
um, but that they haven't realized that profit margin. So it's telling us like, okay, if prices have increased a lot, right, then there's a really big profit that could be realized by
Mm-hmm.
players. And
Mm-hmm.
so that will inform us that, okay, when it gets too big, like if you have an unrealized profit really big, then
Mm-hmm.
you are more you could be more tempted to sell, right? Because you want to realize that profit.
Yeah, book it.
And so that tells you something about, okay, the price is too high when this metric is too high, because a correction could be coming because people have a big unrealized profit, right?
Mm-hmm.
And they will want to realize that profit, to take that profit, right?
Yeah, big exposure.
um, exactly. And the same to the downside, like when people have unrealized losses, as
Mm-hmm.
we tend to say like, okay, maybe prices cannot go much lower because people are already like in a loss, right?
Mm-hmm.
And so the selling pressure tends to decrease
Mm-hmm.
when this is the case. So that's what these type of metrics are tracking, like
Mm-hmm. And
the
I
the
love that.
realized, yeah, profit or losses of people.
And they're kind of like baskets of different solutions and different data, right? So for someone like me, and we'll kind of move on to this a bit later, but for someone like me that's really interested in kind of price action trading, a lot of people would say, well, I'm not really sure where the crossover between price action and an on-chain is, but actually, if I can work out, as specifically, especially as a reversal trader, if I can work out where people are over leveraged, where they're overexposed, right, where the market's overextended, and I can then align that with technical data on a chart, gives me a really, really big edge on the
Yeah.
market, right? Because it's not an assumption that just because we have an overextension that there's a lot of liquidity up there. You can actually kind of start to hunt out what the big players are doing, where they are, how overexposed they are, and then you can kind of factor that all in to build yourself a bit more of an edge, right?
Yeah, exactly. So yeah, what you said there is really important because with on-chain data, we're tracking behavior of people or behavior of large players or important players. So that's really important. And as you say, like this is market data and on-chain data, they're complementary, right? It's not that if you have like your own model, you trade with your market data, that's really okay. But on-chain data really can complement that and help you better understand what's happening,
Mm-hmm.
especially in cryptocurrencies that have this other type of data that basically no other asset has, right?
Mm-hmm. And I think it's for some people as well. it seems like this really, really kind of scary frontier to step into, right? Going from analyzing price charts to then looking at on-chain data, right? But I think actually what you guys do, and we'll look at this a little bit as we go on, but is presenting it in a really kind of friendly and kind of UX focused way, right? Meaning that you guys are focusing very much on the user. You don't need, which a lot of people think is, you don't need a master's degree in computer science to kind of use this data effectively. So I think that's a really exciting thing that people maybe, especially with me, I was very late to it. I remember the early days of watching people like Willy Woo, the emergence of people like Key, and this stuff just seemed mind melting to me, like tracking all this stuff, working it all out. But actually, the more and more it gets packaged in a more user-friendly way, liquidation mapping, open interest funding rates, the Newport chart, to work out levels, key areas that you can look for these overextensions, I find it really, really interesting.
Yes, yes, exactly.
But like I say, I'll save my questions like everyone else for the end. I'll let you continue with this awesome slide deck, my friend.
Yes. So, and then, we kind of section this type of data, so in different sections. So like I told, valuation metrics, right, that answer what would be the expected return of an asset, given that where these valuation metrics are right now, right? And then it's also really helpful to allow us to determine which phase of the market like, are we in a bull market or a bear market? People, always are, questioning that. I see that a lot in social media. Like, are we in the bull market, or is the bull market already started? And so these metrics really help that, right, to determine that, inform you about that. And then there's the network activity aspect of it. Like, recently with Bitcoin, we've seen like a lot of transactions, a lot of fees going up, and because of these ordinals and inscriptions. So that also, the network activity aspect of it can also help to evaluate price. And then, as I said, like the flows of capital from important entities, and also determine whether there's fresh money entering into the crypto. That's also important to assess. Like, is there new liquidity coming in to the market or not? And so that's also important into determining the trend in prices, right? So this, we'll see like different metrics for these four sections of the on-chain data as we move forward. So, for example, the current trend in crypto markets, and we'll start with the valuation models. And this is an example of Bitcoin, and we are going to answer just a simple but important question: is Bitcoin expensive or cheap? And what are the implications for the market? And let me just start with this chart. This is a really simple but important chart. So it's the price of Bitcoin, right? The black line. And then we see this pink line is what we call the realized price. And the realized price is just the average price at which all the people that have Bitcoin right now, the average price at which they got that Bitcoin, basically can be seen as that. And so like a cost, that's how much it costs for people to purchase that Bitcoin, right? And so we over the cycles, we see there's an interesting relationship between these two, right? Between the market price and the cost that people got their Bitcoins. And so when this relationship overextends, then we will see in the next chart, like it informs us about, oh, maybe we are in the top of the market. Or when the price is coming to the cost basis of the holders, then there will be in losses, right? And we can say maybe the price is too low, or Bitcoin is becoming too cheap, and maybe there's some you can start buying, or that bottom is near, right? And so
it's a little bit like a moving average almost, isn't it, the way that this plays in? What I like about this is it's kind of almost like you would overlay a mean reversion theory, right? Which is, if you're getting too far away from the mean, the chances are that you're going to recorrect back close to it. So you're looking at this again. Is it basically is it undervalued? Yeah. Is it cheap, as you're seeing with that? Or is it a little bit overvalued? But it's really interesting because it doesn't really get it gets overextended to the up quite a lot. You can see,
Yeah.
right? But actually, from this data here, it doesn't really have the same extensive swings below the average, does it?
Exactly.
Showing that
Mhm.
actually it's quite an asset that obviously, when it's considered cheap, is getting bought up quite aggressively.
Exactly. Yeah. Exactly. That's exactly what this does over time, and you can see it like in different cycles, right? That this has repeated, and so yeah. So just wanted to make really clear like the realized price aspect of it, because it's important for the metrics, how these metrics are built. These metrics are built with using the market price and the realized price. And so if we go to this next slide, here you can see that the purple area here is specifically measuring that that ratio between the price and the realized price. This is what we're measuring here. And so you can see, as the price, for example, in 2017, 2018, it got to 20K, right? And so this metric was telling you, you know what, at this point, when this metric went to the red area right here that we put here, is telling you precisely that, like, okay, maybe, it's becoming too expensive. If you buy Bitcoin typically here, I mean, your expectations of return are, not good, right? So that's some rule of thumb that you can have, right? Okay, where am I buying Bitcoin, or right? Is it, if I'm buying it here, it's like probably is not the best, right? So, and the same to the downside, as you said, like when it comes to when the price comes to that realized price, then we will have this metric in this green area. And so it's telling you this, like, okay, maybe Bitcoin is now more, fair valued or undervalued, and it's maybe time to get a little bit more exposure to that.
I mean, it's quite exciting, isn't it? I mean, unless I'm misreading this, and like I say, I love this stuff. I'm by a million miles away from being an expert in it, but it kind of looks quite exciting as to where the graph currently is, right? If we look at the purple chart, that looks a long way away from that overextension in the red.
Exactly.
And we can see the increase in the moment, and the fact that actually we've come off of that really aggressive dip. And for the viewers, if we look to the far right-hand side of this chart, we'll notice with the purple area, that's really dipped down there into, if I was to kind of break this down in a real simple kind of premium and discount range of a 50%, you're down in that kind of extension area where it's saying it's a good time to buy, right? Again, it doesn't mean that it is, and future performance is no, expectation of past results, right? But what I would say is that it kind of aligns with a lot of this kind of idea that people have been quite slow to the uptake of this new bull market, right? When actually, if you look at really, really crisp and clean data, and what I love about this is there's nothing assumptive in this. This is pure data, right? And we can see that, how aggressively that comes down. If we look at the other times that purple graph is coming down into the green box, and we look at the flow of price action after it, we can see a really, really kind of consistent trend. And I think it's quite exciting to see where that is in respects on that graph at the moment.
And also, and you see, like, in the recent dip of this metric, right? This was like November, when the FTX collapse happened. So that's when this really got into, really undervalued territory, for Bitcoin. It was telling you that. And also, I want to point out, you see that the purple area, right? But there's also like a purple
line, is it? Like
line? Yeah, exactly. Yeah. It's the moving average of the metric.
Right.
And I've been using it to kind of confirmation for me, is that it's not only that the metric goes to the undervalue area, but when the metric crosses again above the moving average, then that's why I have that's when I have decided that that's when the market trend shifts again.
Okay. So you're watching for that. So
exactly.
So like a moving average, the fact that this little, if the viewers on here can see it, the purple line that's kind of within the purple area, we can see that that's kind of taken a very specific curve up now and is very much trending upwards. Now,
Exactly.
when that crosses that kind of zero line, is it on the purple graph, that kind of midline, if you like, is that the point at which you then start to show caution? So when it crosses, or when it crosses like with an RSI, is that showing kind of an extension of strength?
When it crosses zero, you mean? Like
Yeah, where
when
the
it turns
kind of
positive again?
yeah, exactly right.
Well,
Yeah.
actually, when it turns positive again, it's when historically prices have shown the most of the return of the cycle,
Hmm.
right? That's
Nice.
what has happened. But
Hmm.
for deciding, are we in a bull market or a bear market? For
Hmm.
me, it's when the metric crosses its own, moving average. In this,
Hmm.
so that's when and we're going to see in the next chart more, uh, a better visualization of that. But yeah, just keep in mind that like the metric and its moving average is what we are going to be looking at, that
Awesome.
crossover, whether to the upside or to the downside. That's
Hmm.
important.
Brilliant.
So let's basically we're gonna see this one. The next one is that precisely how we can determine the market phase we are,
Mhm.
like in a bull market. Are we in a bull market? I see a lot of that on Twitter.
Mhm.
Are we in a bull market or is the bull market starting? And well, if you base that phase determination in this metric that we just saw,
Mhm.
um, you can see that we are in a bull market since basically the start of this year. Is
Mhm.
when that metric told you, hey, we are now in the bull phase, right?
Mhm.
It doesn't mean that, of course, yeah, now for now on prices is just up and to the right. Yeah, it doesn't mean that, but
Of
it's
course.
telling you about the this important shift in
Mhm.
market trend. That's what we want to get from this metric. Um, and so if you see that like the green areas is when the metric is telling you um, we're in the bull market, and the red
Mhm.
areas is when the metric tells you, you know what, we're switching now to bear market.
Mhm.
And so you can see this, and that's precisely when the metric crosses over its own moving average. And so
Mhm.
this is another way of visualizing that, and
It's very
tell.
nice and clean, though, isn't it? Right. I like when data gets kind of put across like this. Like you're saying, look, it's not. And actually, I think one of our guests, Erica, who's a long-term friend of the Bird Nest, says here, and I think he's absolutely right. Absolutely amazing data interpretation. Right. Data's one thing. Being able
Mhm.
to show it and use it in a way that's effective is another. And I think this, for a lot of people, would be very, very helpful. Like you say, you're not just going to go and throw yourself all in when you hit the green box, right?
Mhm.
But what you can do is you can overlay other metrics, other on-chain and technical analysis as well to play that into the same principles, and it can just really, really help guide you with like an overall kind of higher time frame view of the bias,
Exactly.
which is excellent.
Yes. So yeah, and the strategies, the strategies change when the market cycle change, right? I
Hmm.
mean, it's not you're not gonna be trading maybe the same if you are in a bull market or if you are in a bear market. Like this,
Hmm.
the models change or the strategies need to change. So knowing this, like, okay, we are now like in a bull regime, right? And so knowing this is tells you, can inform your other models about this, about
Hmm.
the shift in the market trend.
Mm.
Um, and so yeah, and I think the next one. So this one, so here we are just saying, okay, are we in a bull or a bear, right?
Hmm.
That is all that it is answers. But then if you do is based on the same metric, right? All these that I'm showing is based on the same metric, but
Hmm.
this next one is more of a momentum metric. So for example, here you can see this is a what we call the bull bear market cycle indicator.
Hmm.
And so within the bull or bear phases, there could be like, other phases in the market. So if we're in a bull, here it will tell you, okay, we're in a bull, but maybe there's some times on within the bull market that we are, prices just increase too fast, right?
Hmm.
And so this metric will tell you, oh, you know maybe we are overheating. That's how we call it, like the overheated bull.
Mm-hmm.
And for this metric, you can see this is 2023 basically, since here. And so when we hit, this is for Bitcoin, when we hit 30K, this metric, for the first time in this year, this metric told you like, oh, it's overheated, and so there, you can expect like maybe a correction in prices,
Mm-hmm.
right? And when we hit like 35, 36 now, the metric doesn't tell you that yet, right? So it's kind of telling you within the cycle that we are we
Mm-hmm.
like really overheated, or is this like normal, let's say normal price action, right?
Mm-hmm.
And so that's this type of information gives you more, more detail, more granularity within the cycle.
Mm-hmm. Yeah, so you're
Because
looking at the last one to get your big kind of high time frame view, where with this you're saying, okay, look, just because we're in a bull market doesn't mean that it's up only, right?
yes,
You have to
exactly.
plan and phase these corrective cycles. So this is the opportunity that gets you, for just to put it really simply, almost like your buy the dip indicator, if you like. It's like, look, we're in the bull market, however, we're a little overextended at the moment, which means, fine, this could be the start of a larger move down, but it could also just be a corrective move that, if we then align our other metrics and systems,
Yes,
can give us a really good buying opportunity. And obviously the flip reverse if we were in bearish
exactly.
conditions.
Exactly. And so, for example, here in the 2021 bull market, you can see that when it switches to bear, right? Bear is this light blue
Mm-hmm.
area, and so we're in a bull, and then switches to bear, and this is what was at maybe 50 something K, 56,
Mm-hmm.
I think. And so also it's informing you about that switch in market cycles.
Mm-hmm.
And early this year it started showing the other phase, the early bull, we call it. So in
Mm-hmm.
January, that's why I told you, like, okay, we're in a bull market since the beginning of the year, because this type of metric started to hit the alarm on that, like, oh, we are
Yeah,
in a
just straight
bull,
up.
we are in an early bull. And so I remember when I in January I tweeted this, like, okay, I mean, you cannot know the future, right? But all the metrics are aligning into telling you, like, maybe we're switching now from the bear to
Mm-hmm.
the bull. So it's really can help you, into deciding this.
Yeah, I mean, it's got a lot of interesting stuff. And just to interrupt there, Julio, just because I've noticed them, I don't know if you guys use it for this or not, or if it's just because of my trading mindset that's just been in place for so many years seeing it. But it looks like there's some really cool divergences on that chart. When you look at the price action chart, for example, if we look at the first kind of major step into the bull market, right, when we had that huge move up to sort of like just above the mid 50s, we can
Mhm.
see as price action starts to go up, actually your bull market graph
Yes,
is starting to divert the other way,
exactly.
right? And we can see it, or I can see it, even just looking at several other points on that chart where you've got these really clear and obvious divergences that have then led to quite substantial corrections.
Yeah, actually, if you look at this metric, this is just since 2021, I think, 2020.
Mm-hmm.
But if you look at that, at the entire history,
Mm.
that's precisely what that shows what you're telling, the divergence. Because initially, when there's the first, like, increase, the fast increase in prices, like
Mm-hmm.
you say, in the first movement to the 40,000, 50,000, right? The metric will be at the highest, and then from that moment it's just coming down. We're still in the bull, but it's like, okay,
Mm.
less bull, less bull, until
Mm-hmm.
it flips to bear.
Mm. But I mean, very important though, right? Because if you're looking at position management, especially for portfolios, areas like that, it can just give you a little bit of information that as you start to get those overextensions, you can start protecting your positions, you can
Mm,
secure some profit, right? You can just make some slightly defensive or protective moves over positions that, as we all know, I mean, you don't need to see much more beyond on that graph, that as soon as you divert for a little while and then you get some quite big, nasty drops, right?
mhm.
If you can protect your portfolio against those really big, aggressive, impactful drops, that's
Yes,
hugely
exactly.
valuable for
Mhm.
people, right? And also, even if it's not going into a bear market at that point, when the metrics flip back on you, you've secured some profit, you protect the position, and you can actually buy a bit lower, which I quite
Exactly.
like as well. You know, it kind of positions you quite well.
Mhm. Yeah, sure. Yeah, exactly. That's exactly what it's telling you. Like, it could be seen like also like a risk management tool, right?
Mm,
This is
absolutely.
really important. And it complements, like I said, complements your all. If you're like a technical trader,
Hmm.
it's just a complement. It's more information that can complement your other models, right?
Mm, yeah, I love the data. I absolutely love the data. So, yeah, sorry, apologies. So, what have we got next? Oh, this looks interesting. This one.
So basically, this is a little bit, telling you like the same. This is the same idea behind it, but this metric is built with comparing the value. This is for Bitcoin, so comparing the value of the block reward to
Hmm.
miners, the US dollar value of this,
Hmm.
the growth in this block reward.
Mm,
So as prices increase, the value of the block reward also is increasing,
hmm.
right? And so, but this comparing this growth, which can be seen as the revenue for miners, right? So how much the revenue of miners is growing, but
Hmm.
then compare that to how much the difficulty of mining is growing, right? Because the difficulty is like the cost of mining.
Hmm.
Higher difficulty, then it's more difficult for miners to mine Bitcoin.
Yeah, and more
And
expensive, right? So they're paying
yeah,
it's a higher
exactly,
price. They need it to be at a higher price for it to be sustainable. Otherwise, they can't
exactly,
continue to do
exactly.
it.
But there's some times where this the revenue side is increasing much faster than the cost side of mining,
Hmm.
right? And so this is bas- precisely when this turns red, is telling you
Hmm.
that, like, okay, growing too much,
Mm,
faster than the cost side of the mining. And so that's when it can tell you, like, prices is probably overextended also.
hmm.
And so if we look at the other metric, the previous metric, it also tells you, like, in the same areas, right? In
Hmm.
the same areas of price action, tells you this, like, oh, be aware of this, like, you know prices are too high.
Yeah, so you've
And
got
so,
confluence basically, right? When you overlay these different charts, they're highlighting very similar areas, right? So
yes,
if you know
exactly.
on the fact that price is a bit overextended, you've got the divergence happening on the markets
Mhm.
like on the last chart, and now you're seeing the fact that the mining costs are increasing to unsustainable levels for the miners. All
Mhm.
of those things, you can then overlay that with technical analysis. You can look for your lower lows, your lower highs, the breakdown in market structure. And it
Mhm.
just gives you that little bit of an edge, I think. I like
Exactly.
it.
Yeah, so look, like right here at the highs of the 2021, sorry, this metric was saying, miners are being extremely overpaid. So,
Mm.
the revenue side of it is growing, much faster than the cost. So it's
Mhm.
unsustainable, right? That's what it's telling you, like, it's unsustainable. And the same to the downside. When this turns blue, it's like, oh, miners are, they're not being paid enough. They're
Mhm.
really extremely underpaid, which is not sustainable also. So it's basically, tracking this relationship between the revenue side and the cost side of
Mhm.
miners. And also, this also is not just the metric, but uh, if you overlay this metric with, it's not shown here, but with flows from miners, like,
Mhm.
we track also that, like, okay, are miners selling when they send coins to exchanges or to
Mhm.
OTC desks? We can track this. And so when you see this in this metric telling you, like, they're extremely overpaid, miners tend to sell, because
Mhm.
they also take profits.
Yeah,
They also
securing
need to
some money. Yeah.
manage their treasury. And the same to the downside. They need to, cash some of their reserves that they have in order to finance their operations. And we
Mhm.
also have seen this, as in the market cycles, as prices move up or down and to extreme levels. So it's really informs you about what will be happening with miners, right? And
Mhm.
so it's important also to follow that, in terms of prices.
Brilliant. It's incredible the data you can access right now, actually. But the data is one thing. Putting it in a way that it can be digested and
Yeah,
understood
exactly. That
is
makes
brilliant.
sense. It's important. Yes, exactly. So that's why basically what we do is that transforming the raw data, because when you extract it from the blockchain, it's, it
Yeah,
basically doesn't tell you anything.
yeah.
So you need to process that data. And so we have I don't do that, like our engineers do that. And then my job is more of okay,
What does this
build
mean
these
now?
visualizations. What does that mean? So
Mm.
yeah. So let's and then we have the other part of the data, the network activity. We also
Hmm.
track it. For example, I mean, for a lot of coins, but here as an example, Bitcoin. And we built this index that is tracking activity on the network. It tracks the number of addresses that are sending or receiving transfers, the transaction, the number of transactions, how many UTXOs are there, is it
Hmm.
growing or not, and builds an index with this, and it can give you a really cool snapshot of the entire network in terms of
Hmm.
activity. And this also correlates with prices. We've seen in this year, with the inscriptions, with the ordinals, the BRC20 tokens on Bitcoin, like trading activity, network activity going to fresh highs.
Mm.
So that's also another important thing to follow. Like, is the network really being used, right?
Hmm.
So this the other side of it, like the network side of it. And for other coins, is I think more important maybe because they are more based on the activity, right?
Yep.
The utility of the token or
Hmm.
the native token, right? So it's also important to track. And you can track this, all the transactions, how many transactions, how many transfers are they, how many people are using the network with our data. Um, yeah, and then using this, we also build these price bands that we call it, using active addresses. It's kind of like I don't know if you're familiar maybe with the Metcalfe value of a network.
Hmm. Yes. Yep.
Yeah, so with active addresses, we use it as a proxy of users, and
Hmm.
then using this Metcalfe formula, we can say, okay, what's the price that is implied by the amount of users that is on the network, right? And then
Hmm.
we can build these value bands. They're really, you know, they're really useful because if you see from basically 2021 to right now,
Hmm.
you know, prices are basically between these two bands, like the red one and the orange one, basically trading inside those bands, and so
Hmm.
those bands are based on network activity. And
Hmm.
so from network activity, you can infer like, okay, what will be like the expected price, right?
Hmm.
Given how much the network is, being used. And
It's
so
quite
that's also,
interesting as well. Sorry, Julio, but actually,
yeah.
from a technical standpoint, if you were looking at this as, say, like a Bollinger Band, or if you were looking at this kind of, like a ribbon, you can see that the price has those kind of interactions with those levels, right? If you were looking at
Mhm.
this as a technical trader, you'd be looking at kind of strong breakouts above a level, reclaim of the level, regain of market structure, and actually, you can see like the deviations. Price failing to gain acceptance above that 53K one, for example, that we've
Mhm.
had those kind of deviations, resets. We come back, almost test the bottom, back to the top, range in that area for a while. Then we lose back down into the 13K channel. And actually, you can see the attempts price is making to get above it until it has that kind of motion, it has that ability to get above. It almost then kind of treats it as support a couple of times, right? And then
Yeah,
you can see
exactly.
how it's kind of now kind of moving back up. That's
Mhm.
a really interesting kind of visual representation.
Exactly. And let me maybe move a little bit faster. I mean, we have a lot of data, but
With so
but
much,
I,
so much data in
yeah,
so little time, but
yeah. So I'll skip some of these slides. Just I think this one is also really important in terms of the flows, in terms of determining whether there's liquidity coming into the market or not. Really important to follow that. And here, the purple area is showing the growth in the market cap of Tether.
Mm,
So in on-chain data, we think of the market cap of stable coins as, if it's growing, means like, okay, more liquidity is coming into the industry
Mm-hmm.
from the stable coin side, right? More
Mm-hmm.
people entering into the industry, to the market from the stable coin side. There will be like more liquidity,
Mm-hmm.
and so you can see basically since the start of this year how also the Tether market cap started to grow again,
Mm-hmm.
and that correlates with what we've seen with prices increasing, but also correlates with with the other metric that we were talking about, like, oh, at the start of January was when these all other metrics started to flag,
Mm-hmm.
bull market or early bull phase, and so it also correlates with more liquidity coming into stable coins, because
Mm-hmm.
2022 was less and less liquidity, and then at the start of 2023 it shifted again,
Mm-hmm.
started to grow again. And you can see this when there's growth in market cap of stable coins. It also you could expect like, okay, maybe crypto prices will also increase because there's more
Mm-hmm.
liquidity coming into the
Yeah.
market. So it's also some important metric to be analyzing, like the stable coins. It's
Mm.
important. Yep.
Yeah, that gives a great correlation when you overlay that with other market data. I think, like you say, the
Yeah.
liquidity side of things. Is the purchasing power coming into the market? Are
Mhm.
funds being deployed in a way that really kind of backs up the technical data? I think that's
Exactly.
really, really, really key. So, Julio,
Mhm.
talking about the slides, so we are. I want to leave a few minutes for questions at the end because I know there's
Yeah,
going to.
sure.
And if we really don't have time, what we'll do is, my friend, is we'll organise and get you back on another show because literally the response to this has just been incredible, which I expected it to be as well. So, if you had a couple more slides to share, I know you've got
Mhm.
like a whole deck, right? What maybe
Yes.
maybe share a couple of key ones, and then we'll organise another sit down maybe in a few
Yeah,
weeks.
sure.
We can run.
Yeah, I can. If you want to show from the risk side, I think this is really important from the risk side, and a lot of people, of course, are trading on exchanges, or a lot of funds.
Mm-hmm.
Um, they have their money on exchanges, and so also being monitoring the exchanges is
Mm.
important, right, from the risk perspective. And here we're just showing the historical reserves mix of FTX. So
Mm-hmm.
what type of coins do they have, and how much do those coins represented
Mm-hmm.
historically. And the important here is that you see the light blue area. This is the the FTT token value of in the reserves of FTX, and we
Mm-hmm.
all know that one of the catalyst for the collapse was that um, the market saw that at some point FTT was basically all that they have, right, in the reserves. All other coins were gone. They just had FTT, right?
Mm-hmm.
And that triggered like the collapse when FTT was sold into the market. But you could solve these, months in advance to the FTX collapse if you have access to the to the exchange reserves that we track. We track
Mm-hmm.
reserves of exchanges for a lot of exchanges, and so just to point out that months before, um, you could see this, like, okay, this exchange is weird because most of the reserves are in their own token. So that's important to also be tracking, like, from a risk perspective, like the reserves of exchanges.
Yeah, sorry, Julio. So
Oh,
Reese has technical issues. He got
oh,
his
okay, okay,
screen
sure.
frozen. So yeah, maybe if we can just continue until he arrives.
Okay, sure.
Yeah, just go on with what you do. Sure.
Yeah, sure. Yeah, I guess that was the the all the slides and just the key takeaways. So you can go to the Q&A. So key takeaways on chain data is, we think, is a fundamental.
I'm back, guys.
Oh, we're in the takeaways.
Brilliant. And literally, Chrome I don't know what happened. Chrome just kicked me out. And I was like, you can't kick me out now. I'm really, really keen to hear this as well. So apologies,
Yes.
guys. I'm back, but please continue.
Yeah, just I was going to say the takeaways so like we can go to the Q&A. And so we think that the on-chain data is really the fundamental data set if you're analyzing cryptocurrencies. It's a whole new world, and if you just I mean if you have your model, your trading strategy based on market data, you're basically maybe missing the other half of the analysis, right? So we think that really on chain for analyzing cryptocurrencies is a data set that you must have and pay attention to. um, and they can, as we see, as we saw in the slides, the signals, the metrics can tell you really good whether we are in a bull phase. They can tell you about valuation of prices, and network activity and capital flows, which is really important for cryptocurrency analysis. And of course, this is complementary to can be like really complementary, and that's how I think our most of Cryptoquant clients use it. They're traders, they're hedge funds, and so they use this to complement like their own strategies. They have found that they gave better, enhance their models by also using on-chain data. So really complement their market data with on-chain and gives you better results. And also, on-chain data has proven to be key in anticipating major industry events like FTX collapse. You could have seen that literally with the data of FTX research by following that. So yeah, so I think that's the key takeaways.
That's been brilliant. Absolutely fantastic. I know that there was probably another hour or two we could have squeezed out of this show to kind of really dive a little bit deeper in there. But I can tell you right now, it has piqued an incredible amount of interest in terms of the information, the questions that we've got coming in, people wanting to know more about you guys. We've obviously shared all your information. You shared the website. I know you've got the ability to join that for free and kind of learn the basics. There's just one or two things, but there's a couple of questions, but one here from a long-term friend of the Bird Nest, Geo, says, I've not looked into on-chain analytics, so this has been really helpful. Like Erica, I will be digging in deeper. Is there documentation on the website that will help newbies like ourselves interpret the charts and data?
Yes. In the website, there's the data guide that we call it, and it basically has like all the metrics, and then it has like the definition of the metric, how it's built, and how to interpret. So yeah, in our website, there's a data guide that will tell you all that. And also, when you're inside the platform and you're seeing like a chart, below the chart is always like the interpretation of the chart, like the interpretation of the metric, and also a link to the data guide. So yeah, if you're new, the site is really built to educate people right into this new world of on-chain data.
Yeah, and I can vouch for that as well, guys. As I was kind of doing a bit more research, digging into this for the interview with Julio, I think one of the things I found so impressive is it's a very data driven world, right? So much data. There's so many ways you can interpret it, review it, present it. But I think what used to be a very, very scary realm years ago when this first started to come to prominence, I think what the guys over there at Cryptoquant have done really well is really focus on the user experience for people, right? So, you don't just have all these lines, graphs, data, everything. You're thinking, what do I do? Do I buy when it goes red? Do I sell when it... No, look, what you do is you sit on there, you look through it, and actually they'll detail you and follow you through to a really, really kind of in-depth guide of what the data means. But at the same time, when you're just looking at it at face value, you have these brilliant little kind of almost like kind of summary boxes, right? As you go through the different pages, telling you what the data means, how it's been applied, where it's been taken from. So it's very, very, very education friendly. And like I say, we've got the details down there as well in the description.
And also, just to comment on the platform, we have a really big and good community of analysts. And also, if you are in the platform, you can also, have access to their analysis. And so they're publishing everyday analysis, what they see, and it's all based on like an on-chain data. And so you can also learn a lot from them, from their analysis, and it's there in the platform.
Brilliant. And what a nice way to kind of share with the community. So people will create their own graphs, their own interpretations, bring in your conversation topics and points.
Yes, exactly.
I love that. I love that. It's so key to get your community involved in it, right? And actually, if you don't, you're leaving a lot of potential alpha on the deck, right? Because you'll have these really bright minds that come into the space and see things slightly differently. Well, actually, before we kind of go down the rabbit hole too much, one of the key things that's come up, as we can see on the screen at the moment, is people are really, really itching for a part 2 of this, Julio. So I think what you need to do is kind of get that arranged. Now, I have a show on a Monday and a Wednesday every week as well. And I think we can see by the amount of people that are saying, wouldn't it be a great idea to kind of get something together? And I think that would be really, really cool. I think I'd like to get you back on the show. Obviously, we'll make some arrangements after this, but
Yeah, sure.
for now, I'd just like to say a really, really big thank you, for just the time you put into everything, the preparation, the detail. Definitely, you can just see the spike of interest in people looking at how to use this information in this more kind of user-friendly world now. So until we get to deliver these guys a volume 2 of this, Julio, I'd just like to say a really big thank you. It's been very, very informative for me. I've really enjoyed getting to know you a little bit better, getting to know a little bit more about Cryptoquant. Now what we're going to do is we're going to share all of this access, guys. So please do hit us up. It's going to be in the description. We're going to be sharing the video. Julio and the team over there are going to get a copy as well. So make sure you get involved. We'll explain exactly how you can get in there with these guys, and you can find out more information. You can join the site and come back to us at the nest. Let us know what you found. Let us know what it's like being part of the community, right? And we will work very hard behind the scenes to get this series 2 out and live for you as well.
Yeah,
all right?
Sure. Thank you for the invitation, and thank you for the people for joining.
Yeah, do you know what? It really has been my pleasure, Julio. Thank you so much for coming in. Thank you to everybody that attended. Remember as well, guys, this is on recording. You can access this through the Discord, watch it back, look at the key bits of alpha that are dropped, make a note of the different charts that have been used, so that if you do want to explore this a little bit further, you go in well armed and you can make the absolute most of it. So it's been fantastic having you all. It's a big thank you from me, BC Ridgefield, and also a huge thank you to our guest, Julio. And we look forward to seeing you on future editions. Julio, thank you once again, my friend, and wishing you a fantastic week ahead.
Yeah, you too. Thank you.
Take care.